Good afternoon. Welcome to OptionsTender. It's Tuesday, January 14th, 2025. That's about noon Eastern Standard Time. If you're interested in getting these videos intraday, consider becoming a YouTube member for 99 cents. Comes with the Discord, trade alerts, all sorts of good things. All right. So we're going to dive into it. We're pretty much going to go over everything that we did yesterday and just kind of update where the pressures are coming from the bulls and the bears and what kind of situation we're in. I still think that we're going lower, but the market may be trying to make a little higher low for a bigger pullback. I don't think that's probable, and I'll show you why. So let's dive right into it. We have SPX on the monthly time frame. I'm using SPX because we have this information all the way back to 1929 here. That's the top and the 2000 top and our 2024 top that we made on December 6th so far. That's all I want to show there. We're not going to dive deep into much else. I just want to keep showing this chart because we have a lot of new people joining onto this platform, and I love the support, and I want to show you why we're so biased to the downside right now. So here's SPY. We'll go over here. We have the 2008 top, 2021 top, and now our current top here, where this may be our top candle at this point. We're holding above the 8 EMA, but like I said yesterday, I think we're going to at least test the 8 EMA because that's the breakout point. May get a reaction off of it, and then I think we break down from there. Let's go to the weekly. Now, on the weekly time frame, you can see where we're kind of fighting with things here. We have the low from 2023 heading on to the low here. I may be able to draw it just a little bit better. Right there at the low, coinciding with this low. Can I move it out just a tad? We're basically on that line there, so you can consider that holding the trend line at this point. But here's the 20-week moving average. That is key on the weekly time frame. We want to make sure that if you're a bull, you want to get back above that point. So with CPI being that catalyst, we'll see what price action does going into tomorrow. But so far, we're rejecting off of that 20-week moving average. Very negative. I do think price goes down to test this breakout point and then possibly get a kickback right back to the 20. That would be the kiss of death. And then a drop after that. That's the map that I'm kind of following at this point. Where we go down to that point might be the trend line here. I think that makes the most sense. It's a big move there. So the breakout point is so important because it is a former resistance from the 2021 to 2022 correction. We had a retracement of 127 here. Rejection, got above it. Next target was 162. That's a huge weekly target there. And you see we rejected twice off of it with two large moves and then held on to that 20-week moving average and formed a wedge above here. And I think that we're going to test this area, and it may likely be into this. We'll see where price is when we get into these zones here. Maybe in the beginning of February, we have a low and then maybe another low into this cluster. We'll see where price is going into these relationships here. On the daily, trend is our friend. On this time frame, you see that we had this bearish rising wedge, and we're testing this channel. This trend line here. And so being a bull, you're looking at this point of view here, that we have a bull flag, a fake break, and now I put on hedges here in the Discord, and I said 579 is where I'm putting them on, and this is why. Because if this is a fake break and we're just getting a higher low here, we are going to launch off of the bottom of this this area, this confluence, this trend line, and the flag trend line there, okay? And then at that point, it doesn't mean that I'm bullish all of a sudden, but I think a deeper correction might be in store, maybe to test the 20 and heading lower at that point. Now, I'm more on the side that this is just directly going to move at this point. And that's because we're rejecting off of that 20-week moving average. And also, we're hitting this 8 EMA. And if we are in a wave 3 lower, it's very typical that we don't even get above that. We just get this momentum and that we don't get above the 8 EMA. All right, we fooled around with it on this correction, and now we're underneath it, back testing. And that 585 was such a key area. We talked about it again in the Discord. It's so strong, and we're rejecting off of that point. So I guess we're getting sort of squeezed in this area here, but I think the winner will be straight to the downside. If we do get some sort of gap up tomorrow on CPI, perhaps we get up here. And then I'll short again, but we have call protection, and I use a couple different types of call protection. And again, we talked about that in the Discord, okay? Let's move over to a different board. We have time and price today. It looks like we got a high in today, so we'll take that off of here. And I don't really have anything else until later in January, around the 24th to 26th. We have a cluster here, so maybe that's a low. We'll see where price brings us into these time and price relationships. And then these out here, another beautiful cluster, that will coincide with the weekly time frame. So again, we'll see where we are. And this will be a really good one, I presume, since it matches up with the weekly. Okay, let's go. We'll finish off with SPY in just a minute. Let's go around the board with some of these other indices. And you see we're fighting with this former all-time high. So we have a pretty good low here. Fake break, and then right back, as we're looking at it, as a descending triangle, back tested that triangle also perfectly with the 8 EMA. Same situation. We're pushing off of critical areas there. SMH. SMH back tested with that NVIDIA spike, back tested this bearish rising wedge. We can redraw that now that it made a new high here. So we can redraw it at the new lows, and that would take us right here, and we're fighting with that zone right now. So that's that confluence with this new trend line and the 200 moving average. So if we do break down tomorrow, I'm not so sure about this trend line in particular. You know, we can use the wick. It can be adjustable. It's from so far back, maybe that it's perfectly aligned with using the body of it with this move right here, right now at this confluence. So not too thrilled about, there's a benefit of the doubt, trying to get it right on the wick there. So that will be my benefit of the doubt trend line there, but not putting too much weight on that one. So we break down from this 200 moving average, and I think that will be it. This move will get going pretty quick there. IWM. I said earlier in the Discord, everything is back testing. My gosh, and got a nice reaction off the 200 moving average, but back tested this breakdown area. You can consider this a bear flag, just a back test, and again, getting reaction off the 8 EMA. So, you know, if we do by chance start getting a bigger bounce, then you know we have some levels higher, but I'm just not sure that's going to happen yet. DIA. Let's change the board here. Trend is our friend. So we had this trend line here. Same thing. Found support. These lows here, these lows, and just back tested. Now rejecting off of the 8 EMA again. And these two have been just working really well with this 8 EMA momentum indicator for us. And last but not least, on the daily time frame, VIX holding on to that 8 EMA. Again, the momentum is up and getting back above this 19. You see how critical this 19 level was. You have these wicks all over it. And so we're pushing off the 8 EMA, trending to the upside, momentum's to the upside. We'll see where price action goes from here. We are yet to test this area at the 23 yet. I think that's coming, if not even higher there for this next move, okay? And after that, I do think, we get a rejection and then we go higher. It's not going to be in a straight line. I don't think it's going to be anything like this one. That was a big scare there. I think this is going to move a lot more, volatile on the way up. All right, let's go to SPY and finish off here in the 65 and see what else we can learn on the lower time frame, and we'll end it from there. Okay, so here's also that look as if this was a bull flag. And if this is, I do have to, sorry to shift you around here, I do have to show you the indicators. So we have a potential bullish divergence, positive divergence here. Okay, and I can move this over. We don't on the MACD. We're still, the momentum is to the downside. With the histograms, there's a positive divergence. So that, again, we need to protect our account. So if this is true, positive divergence is here on the daily time frame, then we're likely to get new highs if this is going to play out. Now, looking in the past, we have much lower we can go. Okay. Yes, price got down to the 19, it looks like, on the first FOMC drop, but we can go lower, and these divergences can burn through. Okay. That's what happens on the way up. We dealt with that over and over again. It can happen on the way down. So just be careful. But this is giving us a clue that, hey, maybe we should be careful just in case price wants to zip to the upside, especially with a catalyst. There could be a 1-2% day tomorrow to the upside. All right, so we want to protect that that situation. All right, back down to 65. Okay. Now again, we had a fake break for this flag, and we have that trend line that we're working with right here. And so that's the reason. That's the reason why I put on the hedge, because we went up in a straight line here to 585. Great. Rejected off of it. I think that's, the play. But now the market might be trying to make a higher low, starting some market structure to the upside. And I think it's very possible, if we do go higher, that we make it to the options expected move. And that's where I would lay on some more puts. And I'll show you in a minute, 2018, it kind of looks the same with this setup here. And so that would be a deeper retracement instead of just this small one here. Now, that can be it, okay? But I just want to protect my account, protect my swing trades. And so right now, in the green, we have a possible, they call it a 1-2 setup, even though that would just be an A, B. And then the C could possibly be to the 50, but I think it'd more likely be to the 590, which closes that gap. And that's that zone where the options expected move is as well. So I think that would be the more likely situation if we get a positive reaction tomorrow. So that's how I'm going to protect it. And then we look for puts going into the 62% retracement, because this does look like a 5-wave impulse move. And that would mean that one of two things. This is the end of the move, a wave C, and we go higher. Or this is just the beginning of this move, and we have a 1-2 setup. Okay? That's where our dilemma is. That's where, this market's been fighting and fighting. You don't see this huge trend down. We just had the one FOMC catalyst there, but it seems like it's just so choppy and very difficult to hold on to your trades this long. And so we've constantly had to add on protection and things like that, just to keep us confident in our swings to the downside. You know, I didn't just hold this purely, maybe this move, but after this, you know, we start getting to these zones down here, and I start wanting to protect our positions. I think it was right here. And so now potentially an ABC coming up into tomorrow. We have some, I need to add some more time and price relationships here. I don't have anything until the 16th, so 2 days from now. So maybe that's where we get a high, and we start seeing a move back lower at that point. Let me show 2018 just to give you a visual of what I think is happening here. Let's change our path, 20 years. All right, so this setup right here, this looks exactly like what I think is happening. And you notice after this move, we had this move already, and I think we're here. We got this bounce. We're getting back into the bounce. You see how shallow it was, and then see ya. Price really started to accelerate to the downside, and I think that's what's going to happen this time around. That's what I'm looking for. After this area fails, then I know that it's possible that it goes straight down to this zone here, and I do think we get a reaction off of it. So I think somehow, you know, it could go further. It could continue like 2018 and just go down to our lower levels. That's possible, but I think we'll find buyers here. So I think this is a much smaller version of 2018. I think we'll find buyers at the farthest point at the 555 200 moving average here, and then we'll get that bounce for the kiss of death back into the 20-week moving average. So it's probably going to be a bigger bounce than you know, what we think. Or it might just be back testing this broken down flag. That would be a broken down flag at that point where price accelerates. Maybe we back test it and then head lower. So I am looking for lower prices, but I think we'll get a reaction in this area. Okay, you guys, that's what I got for you. Thanks for watching. Don't forget to like and subscribe, and appreciate all of the support that we've had here. Thanks for watching. We'll see you tomorrow.